What's going on, ladies and gentlemen and beautiful people? As promised, it's me, it's your boy Nes. We're going to break down MACD. Now, what is MACD? All right, MACD, M-A-C-D, the moving average convergence divergence indicator. So let's get into it. All right, so the MACD over here is the one in the bottom, okay? You'll see that there's two moving averages over here, 12 and 26. Last video, when we were talking about the Ichimoku clouds, we were starting off with 926, okay, but this is 1226, all right, which is still pretty common, all right. And then you see these bars. This is what you call the histogram, okay. So the green bars indicate bullish momentum, all right, meaning price is going up. The red bars indicate bearish momentum, which means price going down, all right. Right over here, you're going to see the potential buy signals are green flag, potential sell signals are red flag, okay? And so, listen, when two moving averages cross, there's a corresponding crossover of the zero level on the MACD as well. This is the MACD. The zero level is right over here. See it right over here. All right, so it's the middle of the histogram, okay? The middle point of the histogram, that is the zero level, okay? Now, we can see that as the two moving averages move away from each other, the MACD line also falls and rises. All right, so you can see over here, boom, these are the reference points. All right, these are the reference points over here. You can see clearly. All right, now, number one, okay, the signal line crossover is what you want to look out for first and foremost. All right, so whenever we see the blue line crossing up the gold signal line, that is an indication for a potential buy, hence the green flag. When you see that the blue line, all right, is crossing down the signal line, that is an indication for a potential sell. All right, so, bear with me here, okay? Again, this is the histogram, all right? The bigger the gap between the lines, the higher the bars that the histogram will display, okay? As I said, when the MACD line is above the zero line, it is considered bullish momentum. When the MACD line is below the zero line, it is considered bearish momentum. Now, here's the thing with these signals. The trick to these buy signals, all right, are only confirmed when both lines cross above the zero line on the MACD. But the same holds true for sell signals, okay? So the same but vice versa when it comes to the sell signals. So when it's below, all right, not above, when it's below, all right, the zero level, and you're getting that sell signal, you're going to be able to see it. Now, you're going to be able to see it. Look, here's a sell right here. All right, we see it cross down the zero level over here. All right, you're going to see this a couple of times. All right, there we go. Here's one right here. All right, and you can nitpick on all these. Okay, you can nitpick on all these. All right, now check this out. We have two moving averages, two exponential moving averages on the top on the main indicator window. But the MACD is the one over here in the second indicator window. So yes, it is helpful to also have moving averages on the main indicator window, so that way you can basically, keep everything aligned and you can be on point with that. All right, now check this out. When the MACD line crosses above or below the signal line, known as a crossover, the histogram of the chart will also shift from negative to positive or vice versa. This is a common signal of the MACD and indicates that the MACD, and thus trading assets price momentum, is shifting, since the signal line should lag behind changes in the MACD line. Crossovers can last a few days or a few weeks and should be traded on cautiously, especially if the trading asset in question features a lot of price volatility. However, crossovers can be a more rigorous way to identify weakening or strengthening momentum than simply looking for inflection points in the MACD line. All right, so very simple. You can use these as additional confirmations. All right, whenever you see that the price action on the top is matching with what the MACD is displaying, all right, on the MACD indicator, that is convergence. Okay, when you see that there's kind of the exact opposite thing happening, all right, that is divergence. All right, and so you want to be able to use the MACD line, I'm sorry, not the MACD line. You want to be able to use the MACD indicator, all right, which consists of multiple EMAs and a histogram, okay? When you combine this with some of your other indicators, whether it is indicators for trending purposes or indicators for, scalping purposes in a consolidating market, the MACD is a pretty prominent indicator that serves as a really good indicator to throw on your strategy template. All right, remember, no indicator is 100% correct 100% of the time, but you have to treat your indicators like a jury. If the majority of your indicators is indicating price is moving up or that price is moving down, you want to go with the majority rules. There's going to be some times where an indicator, maybe two indicators, is showing the exact opposite, but you have more indicators that's supporting what you see. I think the most important thing is that you identify if the market is actually trending or consolidating, and that'll be a good point. But keep in mind that trading involves risk, all right, including some or all of your initial investments. So use the MACD responsibly, okay? You're gonna see quite a few things pull up, all right, on the MACD that you won't necessarily see in some of these other indicators, okay? So keep this in mind. Now, we could blow this up, and you feel free to take a snapshot over here. This is the MACD, all right, indicator in full, all right, as you can see right there. Now, if I double click on that, double click on the main indicator window, there you have it, okay? There you go. You can line everything just right, okay? And if you want more of an explanation, I mean, there's plenty of resources that I could give you, but for the most part, that is the simple breakdown. All right, you're using the two moving averages, you're looking for the crossovers, all right, you're paying attention to the histogram, and you'll be good, with just that alone, okay? Now, you may already have indicators in the main indicator window, so maybe you don't want to put the 1226 EMAs on the main indicator window that you see up here, and you probably just want to keep it only in the MACD. That's fine. If you're using other indicators for your main indicator window, hey, that's good too. You can mix it up. You can mix up your strategies however you see fit. But for the most part, there you have it. So moving average, convergence, divergence. Okay. Now, when you have a situation where the MACD is showing some divergence, okay, then one of the things that you're gonna, what's gonna pretty much stand out, and you can actually mark it on your chart when you do see it, okay? You can mark it on your chart when you do see it. When your candles on the main indicator is going up, but for some reason the MACD is showing you prices moving down, all right, you're going to want to mark that up, okay? Or vice versa. Or vice versa. 1 second, y'all. I know some of y'all seen, I'm getting a lot of reactions. Some of you seen the video that I posted. It was a remix video on Instagram where it was Ronald Reagan breaking down inflation and what exactly, inflation means, okay? So, it's crazy. I'm seeing some of these responses here. But anyway, so when it comes to the divergence, the MACD divergence, okay? Bullish divergence occurs when the price of an asset, trading asset, currency pair, Forex, is making lower lows, but the MACD is making higher lows. This suggests that the selling momentum is slowing and that the asset is oversold and due for a rebound. Bearish divergence is basically the same exact thing, but the exact opposite, right? So bearish divergence occurs when the price of an asset is making higher highs, but the MACD is making lower highs. This suggests that the buying momentum is slowing and that the asset is overbought and due for a pullback. All right, so I don't know if this kind of reminds you of the stochastic and also the RSI that we covered in the last couple of videos. That's basically what it is. Whenever you see the divergence happening, that means momentum is slowing down on any of these sides, right? So MACD, moving average, convergence, divergence. There's certain things I have to retouch on sometimes, just in case if a new person is seeing this video first, as opposed to some of my earlier videos. But yeah, I recommend going back to my earlier videos if you haven't seen it already. If you did see it, we can keep moving forward. But there you have it. MACD, moving average, convergence, divergence. Convergence, going with the flow. Divergence, all right, showing showing a mirror effect, showing kind of the opposite thing happening, right? Which is an indication momentum is slowing down. Bullish or bearish momentum possibly slowing down. I hope this video was helpful for you and easy for you to understand. Stand by for some other videos. This is the second value drop for tonight. All right. This is Monday, October 30th. Stay blessed. Take care. I'll see you on the next videos. Peace.